Very
When
much.
we say auto insurance, what does auto insurance actually cover? What is auto insurance policy?
When we talk of auto insurance policy, we refer to motor insurance. And under motor insurance, we have some various types of covers. We have third party, insurance, we have third party fire and theft insurance, and we have motor comprehensive insurance. This third party insurance covers only the third party when the vehicle is involved in an accident. In the event of any accident, the insurance company will come out to settle the third party involved in the accident. Now, we have third party fire and theft. The third party fire and theft covers the vehicle against third party involvement, against theft, and against fire. So in the case there is fire, there is theft, and the third party involved. Then we have comprehensive, which is the holistic form of cover. Covers all those indices I mentioned earlier on. It covers the third party, it covers fire, it covers theft, it covers stolen, it covers everything that happened with the vehicle, except of course mechanical fault. That's the business of the mechanic. That is not under insurance. Thank you very much.
Okay, when we say third party, can you explain that exactly? Who is the third party in the case of an accident? You have different cars on the road. An accident usually will involve at least two vehicles or two vehicle owners. So who is the third party in this case?
Yes, the third party in this case, you have a company. You have a company which is an insurance company. That's the first party. The second party is you, the insured. The insured populace is the second party, and the vehicle that is involved in the accident is the third party. For instance, if I drive my car, I hit someone on the road and damage that vehicle that is damaged is the third party. My insurance is the first party. I am the insured, I'm the second party, and the vehicle that is involved that is hit on the road is the third party. So the insurance will come out and pick that vehicle that I, as the insured person now, damage on the road. The insurance will come, pick that vehicle, and fix it. That is where third party insurance comes in.
To ask that, because a lot of times when we say third party, it seems something that is not very clear to the layman. But I think what you just explained now, it is clear to all. Thank you. Femi.
All right. Talking about this issue of third party, I would still like you to shed more light on what it takes to get claims, because most of the time where the challenge is getting the right response to, how soon, looking at the provision of the Act's guiding auto insurance, how soon should the insurance company take up this responsibility?
Yes, thank you. The insuring public, they need to know that as soon as there is an accident, we have accident on the road, snap the events, all that happens on the road, take a photograph, snap of them immediately, and report the loss. Report the accident to your insurance company. File in your claim. Report the accident to the insurance company. The insurance company immediately will pick up the job. They will inspect the vehicle. They will realize, they will see that of a truth, you damaged the other person's vehicle. And the insurance process will continue from there. And within the space of a week, we call it discharge voucher. 2-3 days, discharge voucher will be issued. The moment the discharge voucher is executed and you sign off that you are okay with this, before then you will have submitted the repair estimate to the insurance company. They will look at it. The insurance company will look at the repair estimate and issue the discharge voucher within the space of 1 week. The discharge voucher is executed and the claim is settled.
Okay, so how much auto insurance do I need as a car owner? If I walk into an insurance company and I say I want to take on auto insurance policy, what are the things to know about it? How much of premium will be demanded for me to pay? So how does it work exactly?
Okay, thank you. We are talking about third party now. third party under the law is 50,000 for a car. You want to insure your car now, for instance, a Peugeot 44 car, a Toyota Corolla car, you pay 15,000 naira for 1 year. Your car will be insured. Bring the documents of the vehicle, you get the vehicle license, you get the proof of ownership, all other documents that were issued on the car. You take them to the insurance company, they issue the insurance certificate for you. The moment certificate is issued, your insurance starts running and the vehicle is covered. You pay the premium of 50,000 on third party. When it comes to comprehensive, it is rated by the regulator, and we have 5% of the value of the vehicle. For instance, if your car is 10 million, you pay a 5% of 10 million, which is 500,000. That is your premium per annum for 1 year. Insurance contract is an annual contract. It's paying for 1 year. After 1 year, you renew. So that is how you make your premium. At the moment your premium is paid, because there is no premium, no cover. If your premium is not paid or adequate premium is not paid, the car is not going to be insured. So the moment your premium is paid, the insurance company keep running. That is how the premium is paid, and that's how the contract will commence.
All right. I would like you to educate our viewers on the differences between third-party insurance and comprehensive insurance. Let's look at the merit and then the demerit, and then what are the provisions, what are the things, the coverage area when it comes to third-party versus comprehensive insurance.
Yes, when it comes to third party, like I said, third party is just a cover that you have bought to cover the vehicle that is involved in the accident, the vehicle of the third party vehicle that you accidentally hit or damage. Third party only covers that type of vehicle. In the event of any accident, insurance will not settle any claim that involves your own vehicle. It will only settle the claim that involves the car that is damaged by your own negligence. You arrive on the road, you hit someone's car, and you are carrying a third-party insurance. The insurance will only settle the claim brought up by the person that you damaged his car or her car, as the case may be. But when it comes to comprehensive will pick the bill of your own vehicle and the vehicle you damaged, even if it involves 3 or 4 more vehicles, and you are the cause of, you are the proximate cause of the loss. You are the cause, the major cause of the loss, the traceable cause of the accident. The insurance will pay your claim, that is to fix your car. They will fix other vehicles that are attached with the loss, with the accident caused by you, who is the insured of the insurance company. And in third party, there is limit. So, for instance, we call it third party property damage. There is limit that you can go. The debt is limited. The medical expenses is limited. But under comprehensive, the debt is unlimited. The claim under debt, the claim under medical expenses are not limited. So it can go and on and on and on. So that is the major difference between comprehensive and third party.
Okay, knowing that comprehensive covers a whole lot, how much of patronage does comprehensive insurance, comprehensive auto insurance enjoy as compared to just a third-party insurance?
A lot in the market today, a lot, because this is the best time to insure. The insurance public, they are aware that this is the best time to insure, because when you have a property, when the economy is not smiling, and you have a property, the fear is that you don't want to lose that property, and in the event of any loss, you want someone or something that will bring you back to the place you are before the loss, because that is the whole essence of insurance, to bring you back to the position you were before the loss. So the patronage in the area of comprehensive is massive in the industry today. People go out there to insure their vehicle against comprehensive, because when you lose your vehicle as a result of third party, there might be a third party accident that will involve, that will make you, that will lead to a total write-off of your own vehicle. And that's a big loss. And that's a big loss. You will not be able to recover the vehicle back. However, if it involves comprehensive, if the comprehensive insurance, you get your own vehicle, you get other sorted out. So people buy into comprehensive now more than third party in the market.
All right. How will you educate those who have this narrative that this annual payment for auto insurance shouldn't be in cases where they don't record any accident? Some people feel, yes, I've made this payment, then why do I need to pay for the next one? Isn't there a way the one paid previously can be revalidated for the coming year? There are some who have this funny narrative. I would like you to react to this and probably educate them.
Thank you, my brother. Insurance is not like that. You know, insurance is a pool of risk. It's a pool of risk. You brought your own. Mr. A brought his own. Mr. B brought his own. Mr. C brought his own. It could happen within a year. There might not be any loss. But when you have the entire basket like that, it is not possible for the entire seed in the basket, for one of them will not be, involved in an accident or loss, as the case may be. So when you put all the pool, when you put all the contribution in the basket, that will enable the insurance company to settle the loss. The fact that you pay your premium and there is no loss today does not mean there will not be loss tomorrow. You can insure today and there is loss tomorrow. You can even insure your vehicle today. As you are driving out of your office, there is a loss, and it can be total loss. In that case, what do we say? For instance, you insure a car, 100 million naira value car or 80 million car, and you pay 5% of the value of the car. And you just drive out of your office, and the vehicle comes from somewhere and crush the car, and that's a total loss. You will just reverse back to the insurance and lay your claim to collect 100 million. And by and large, you have just paid perhaps 5 million, and you are collecting 100 million. That's the case. But in the case whereby you pay your premium and there is no loss for the whole 1 year, you pay for the second year, there is no loss, insurance can look at you and say, okay, this my customer had paid for 2-3 years without any loss. In the fourth year, let me give him what we call no claim discount. In the olden days insurance, when some of us came in newly, that's what we call it NCD, no claim discount. It used to be 10% graduated, 10%, 5%, 10%, the following year 50%, the following year 20%, 30%, until it gets to 50% midway. But now this day that that is evolving, the global change of the industry, we go straight 5%, then we can look at you and say 2 years you have paid, consequently no loss, then we can say, okay, let's give you a window of discount that, okay, you are paid for 2-3 years, there's no loss, then we'll give you discount. But not that because you have paid this year, you will not pay next year. Or because you paid this year, there is no loss, then we now to roll over and say, okay, what you paid last year, let's use it this year. No, it's a contract of 1 year, like I said the other time. It's an annual contract. It has gone with last year, so we have to start another contract afresh. That's how it's played out.
While you were talking, you talked about filing for claims. Like, for instance, you just bought an insurance policy, and as you drove out of the company, you got involved in an accident. You can turn back and get claims. The procedure for claims, is it as simple? Take us through it, please.
Yes, thank you. It's very simple. I will let me use the opportunity to implore the insurance public that when you are to insure your vehicle, there is what we call pre-loss inspection. Please make sure that you give your insurance company opportunity to inspect your vehicle. There is no way you want to insure an asset that you don't see. So the insurance company will want to see the vehicle. We call it pre-loss inspection. As soon as that one is done, the insurance company will issue their documents. Because in the event of loss, there are some documents that always cause the delay in settlement of claim. These documents, you will have made sure that they are put together at the inception of the policy. At the inception of the policy. Because if you are insuring a vehicle, and the insurance company is chasing you all around to inspect the vehicle, and you are avoiding the insurance company, or you don't give them time for them to inspect the vehicle, in the event of loss, the insurance company will call up the inspection form. And if it is not there in the file, that will bring a litigation. It will bring a delay in settlement of the claim. But if these documents were put together at the inception, to file your claim will be as quick as going out and coming in, because all the documents are on ground. The custom papers are there, the purchase receipt is there, the vehicle license are there, the proof of ownership is there, everything is intact. The KYC, your KYC documents, you complete them, and they're all in your file. The moment there is loss, you report to the insurance company. It will not take insurance company, a viable insurance company, more than 1 week to look at that claim, adjust it, get the estimate from you, adjust it, and put you back to position you are before the loss. So it's as quick as that. There is no any point for delay.
All right. What are the provisions that are available for someone whose vehicle has been stolen or is stolen? You know, what should be the procedure? And then is there tendency the person is going to get his car or being replaced? I would like you to educate us on what happens in situation where you have theft, and then what should be the right procedures in getting claims?
Yes, in the event of stolen of vehicle theft, the vehicle is stolen, it is expected that you report such incident to the police. In all claims that you are filing, police inspection, police report is very important. In this case, you report, even if there's an accident, you still report to the police. Let there be police report. But because the claims department will ask for the claims for the police report. When a car is stolen, you report it to the police that your car is stolen, where at so place, so time, so period. The police will issue their notice to the general public that a car is stolen, and the police will bring up, I mean, their own, chase or I mean, to go and look for the car.
Okay, there's a connection issue, but we'll get back to Joshua Foladuili as soon as connection is restored from his end. But in the meantime, you asked him about theft. Yes, crucial. Yes, very crucial, because when we talk about auto insurance, sometimes it's just talked about you taking out insurance, but what happens when the car is stolen? How do you prove that it has been stolen, and how do you file for claims? All right, we have Joshua Foladuili back with us on the discussion of, okay. He's having a bit of internet issue, bad, poor connection rather, but so as soon as his connection is stable, we will continue the conversation with him. Yes, I was saying that, how do you prove that your car has been stolen? But he mentioned that you would need police reports for that. I'm wondering if that's all, and then just like you wanted to.
I think what is largely playing out there is lack of orientation or education, for people to know what to do when these things, happen. There are things you don't plan for, they happen. That's why they are called accidents, in cases where cars have been stolen or your vehicle is being stolen, I think what people do most of the time is to lament or blame the police, and then when you get to, for you to get the help from the police, you're going back and forth, you're asked to bring this, and then this is popping up, you have to see this person, and so people get discouraged eventually when you're going to the police station for almost virtually every day or virtually every week, and you're not getting respite, your car is being replaced, and you're not getting result. So that's why this kind of conversation is important, for people to know what to do in the moment it happens. Let's take the discussion back to our guest. Alan is back with us. Glad to have you join us once again. All right, kindly unmute your device so that we can hear you. I hope you can hear me.
Can you hear me, sir? Thank you.
Okay.
Sorry,
So
there was a
you were
loss
making
in
your
the,
submissions
communication there.
relating to the issue of car theft, so I would like you to continue in that regard. Please go ahead.
Thank you. Like I was saying, the moment the moment your car is stolen, you report to the police, and police will issue their instruction and see how we can trace the vehicle. Then you report the loss to the insurance company at the same time. So insurance company will keep following up with the police, and there's a space of 1 month given, or 3 months now. After which, if the car is not found, insurance company will have to pay your claim by giving you the same value you insure the car back to you to be able to purchase that same vehicle. And that is why it is important these days that when you are insuring your car, because of the economic situation all over the world, you must insure your car adequately. That is, using the value of the car in the market, not the value of which you bought it last year or 4 years ago. Some of the cars we bought 4 years ago cannot be replaced with the same amount this year. So we call it under insurance. For instance, a car that you bought for 4 million 2 years ago, such car now is about 12 million. If you insure the car for 4 million and there is a theft or total loss, as the case may be, insurance will settle your claim around the 4 million. Then you may not be saying, oh, your car now is 12 million in the market. You cannot spend 4 million to get the car again. You need 12 million. You cannot get 12 million because the car was insured for 4 million. So when you are insuring your vehicle these days in this economy today, you look at the market price, market value of the vehicle, and you insure it adequately. So in the event of any loss or total damage being written off, the insurance company will pay you based on the market value of the vehicle.
All right, a follow-up to that question. The narrative you're painting now is if a car goes for 4 million, in the process of documentation, you can write 10 million. Will that not look like you're inflating the price of the vehicle? Because like you said earlier, the premium should be like 5% of the actual value of the car. So if the present value of the car is 4 million and you're advising us to make it 10 million, will it look or bring any disparity as far as the price or documentation? Please, I would like you to shed more light on that.
Yes, like I said, it's important that you are insuring the vehicle. Yeah, the vehicle was bought 4 million, maybe 3 years ago. The same vehicle that was bought for 4 million 3 years ago cannot be gotten for 4 million this year. We all know that. So for you to be adequately insured this time, you need to go back to the market and get a revaluation report of the vehicle. It's simple. You can go to the car shop. They will issue another receipt for revaluation of the vehicle and let you have the proper value of the vehicle. This is to the advantage of both parties, both underwriter and both the insured. On the side of the underwriter, because when you are laying down your claim, for instance, if there is accident, those parts that you are going to buy are not going to be sourced at the same rate they were sold 4 years ago. And your premium, the 5% value, for instance, of 4 million, will not even be enough to fix the vehicle. In the event of accident, the parts have been very, very expensive, skyrocketed. Now, when there is total loss, if insurance is going to settle your claim on 4 million basis, and they give you 4 million, maybe less some little deductions here and there, and they give you 3.7 million as the case may be, and you go to the market, you cannot buy that same car for 3.7 million. Don't forget, I told you the other time that the simple definition of insurance is to place you back to the position you were before the loss. So if the position you were before the loss is that you are driving a Toyota Corolla car, 2015 model, that you bought for 6 million or for 5 million then, the same vehicle now is sold for 12 million, 13 million in the market. So if you had insured it for 5 million, 6 million, and you want to go and get it after loss, or after it has suffered theft, you will be ready to cough out additional 7 million. to be able to buy the same vehicle. But if you have revalued the vehicle to appropriate vehicle that you could get to the market today, then you insure it for 12, 13 million. And if the car is stolen, insurance is paying you the same 12, 13 million. Yeah, you can smile back to the market and get the same vehicle back into your car park.
From what you just said now, it seems like auto insurance is very complex. So let me understand, this revaluation that has to be done, does it have to be done on a yearly basis? Because if I take up the insurance policy this year, maybe the car was at 4 million this year, at what point do I need to do that revaluation to reflect the actual market price of that type of car?
Yes, thank you. You know, it's advantageous for you to look at it yearly. You know, like I said, insurance contract is an annual contract. You insure your vehicle now. Today is 22nd or 21st of November. Now, by next year, November, it will be 1 year. If you are going to renew your vehicle next year, it will be better for you as the insured to look at the value of the vehicle and say, okay, this vehicle last year was 10 million. This year, the same vehicle is 12 million. It's a personal decision. You can say, okay, let me revalue this vehicle and renew based on the current price of the vehicle in the market. If you are going to insure on your existing basis, the existing value, nobody will quarrel with you. Nobody will force you to change the value. But when there is loss, it's going to be settled based on the insured value, so that there will not be any room for under insurance, or the claim you are paying me is far less than the value of the vehicle. There will not be any room for litigation. So the properties will have been done. So it can be revalued on a yearly basis.
So how much of this information is available to the customer at the point of payment? How much of this do they know? Because some people at the end of the day, when they file for claims, the complaint sometimes is that they receive what is less than what they expected. How much of this does the insurance provider inform the consumer or the customer about?
Yes, we make sure we train our people. Like we have agents, we have insurance brokers, and we have the practitioners. Those three factors are, you know, the selling point of insurance. We make sure that we train our agents, our marketers, when they go around, they educate the insurance public that this is the best thing for you to do. In case you are renewing your vehicle, and in the case of any loss, in the event of any loss, this and that are what will be due to you, so that there will not be any issue of what I'm getting is less or far less than what I'm supposed to get. That is what always brings that dichotomy at the end of the day, in the event of any loss, that may ensure the vehicle on the road now is 20 million and you are paying me 7 million. How do you want me to get the balance to buy the vehicle for 20 million? So we make sure that we tell our people, our clients, our prospects, our agents, that when you are insuring your vehicle, when you are renewing, please, this is supposed to be the value for this year. And if you now insist that, no, you can't go beyond this, we take you for your advice and we issue our document based on the value you present to us.